Hi there, Evan here with Crypto and Markets for Wednesday, July 11th, 2018. Just getting home after a long day at the office. What a day, what a day. Anyhow, two things I want to cover for you before I go home tonight. Firstly, there was a great article in Zerohedge that came out this afternoon talking about there being a record short position in the US treasury market. As we all know, as part of this global growth narrative, along with the price of copper, more on that in a minute, stocks obviously, oil as well, everything got bid up on the premise of global growth improving around the world. And that trade, especially here in the last couple of months, looks like it's really starting to unravel. I mean, the stocks did sell off at the beginning of the year. They came back. Of course, the U.S. 10-year yield was reflecting the fact that bonds were kept artificially low by QE. They came back up, and then people realized there's not enough growth in the world to justify this high a yield. The U.S. dollar got a bit under it as a safe haven, and the 10 years soon afterwards got bid as well, lowering yields. They peaked out at around 3.11% roughly 2 months ago. They're at 2.84 now, and look to go lower. Now, I put a chart out on this on Twitter about an hour ago. I will link it down below for you, talking about the correlation between the price of copper and the 10-year treasury yield. Again, copper, us economist type call it Dr. Copper for a reason. It's an industrial metal you see used in all buildings around the world. Obviously, it's the most important. Of course, in June, as it looked like it was starting to roll over, it got bid back up again. There was the Vedanta mine that got shut down in southern India, and then it came out about a possible strike at the Escondida mine in Chile. Peaked out around $3.30. Once the Escondida mine, it came out that they weren't going to go on strike. Again, I even said it before, I'll say it now. Never a good idea to strike in a slowing economy, but I digress. It came down, started going down after that, been going down ever since. That's the most important thing to watch in the market right now. Watch Dr. Copper, watch the US 10-year note. More money, as the global economy keeps slowing, will pile into the US 10-year as a safe haven. And again, knowing from this article here, we know there's record shorts right now in the treasury market as well. Part of it is going to be money coming in. Part of it is going to be a short squeeze. But whichever way you cut it, the 10-year treasury yield is going much lower. Price of copper, Dr. Copper, is obviously going to follow. Right now, in fact, if you look at that correlation, 10-year treasury note 2.84, copper sold off 3.5% today. It's at 2.74 now. Both trending in the same direction. That correlation right now is looking pretty good. And really, that correlation's actually been there. You'll see in the chart, it's been there since 2013. The industrial metals traders, the bond traders themselves, way smarter than me, you, or essentially anybody else watching this video. Seeing what I see in the global economy and the slowdown that's ensuing right now, I think they got it right. Again, copper 10-year yield correlation down below. Zerohedge article down below also. all I gotta say. Hit the like button, leave a comment down below, subscribe, and most importantly, follow me on Twitter, @CryptoMarkets2. Y'all have a good day.